Welcome, landlords and property investors. Should you buy a tenanted or commercial property if that property has a low rental yield? Or would it make more sense to buy a vacant property, place a tenant in yourself, and achieve full market rent from the day they move in? My name is Phil from Let Property, and we help thousands of landlords every year buy and sell their investment properties. I've personally grown my property portfolio to a multi-seven-figure value, and I'm here today to help investors just like you to get on the path of becoming a successful, hands-off property investor too. So, in this video, I'm going to explain why some properties have low rents and introduce a unique strategy used by some of the best investors in the world, utilizing low rent properties as a great investment opportunity. Let's get straight into it. Around 95% of investors trying to buy family homes or individual units in tenanted property transactions are buying for cash flow reasons. Now, if you're buying for cash flow and the property is returning less revenue than it should, there's often an emotional response where you feel like you're getting the short end of the stick or have taken on some kind of problem property. At Let Property, we handle a large number of tenanted property transactions, and many of those properties actually have low rent when they're marketed. The reason properties have low rent is due to how much rent has increased in recent years. On average, in 2023, rent went up by 5.5% across the UK, and in some areas, over the last 12 months, they've increased by 10%, which is a huge level of rental growth. The issue is that if the tenant took on a property 5 years ago, rents can be sometimes 20 to 30% below current market rental value. So, on one hand, if you're buying a tenanted property where the rent is still similar to that when the tenant moved in, you're getting a long-term stable tenant, but the amount of income that property is producing might be lower than if you were to put a new tenant in tomorrow. Most investors see this as a disadvantage. But later in the video, I'll show you how some savvy investors look at this as a positive when investing in a property. What we need to understand is when we invest in a property, the core value of what we're purchasing is the property itself. Even if a property has a tenant still in it, it will be valued if the property was vacant because that's how the residential market works. We should remember that businesses and large assets trade all the time around the world. And often these assets are not optimized to produce the maximum income they could. In fact, some of the best opportunities in the market lie in areas where assets are underperforming, financially speaking. Most investors are very reluctant to purchase a tenanted property with a low rental yield. So this creates an opportunity for someone who can step in, improve the asset, and sell it for a profit later on when it's producing more income. At this point, you might be thinking about all the regulations, rental caps, and government restrictions on raising rents. But I want to challenge that thinking. I've been around property investing for over 10 years, and I've been investing myself for 5 years. What I've found is that relationships with your tenant matter more than anything else. Many investors make the mistake of treating their investment purely as a number on a spreadsheet, failing to build a relationship with the person who's paying the rent every month. When landlord and tenant relationships break down, it will be difficult to raise the rent at a future date. In my own experience, I haven't had any issues with my tenants when it comes to rent increases. We take care to ensure the service we provide is of a high standard, which helps maintain a solid relationship. Most investors who struggle with rent increases are trying to raise the rent too much, causing the tenant to dispute it or seek an adjudicator to lower the rent. In reality, rent isn't fixed. Rent increases don't follow a strict rule book. The only time you'll face a problem is when a tenant disputes the increase. This means that rental caps only come into play following a tenant dispute and rental review. So, instead of worrying about rental restrictions, focus on buying great properties with great tenants and building strong relationships from day one. By doing so, you can work with your tenant to gradually increase the rent. Moreover, buying a property with a lower rent presents an opportunity. Often, you can negotiate a lower purchase price for the asset. This is how smart investors think. Let's say the rent for a property is £700 per month, but the tenant is only paying £550 per month. That's £150 per month in missing rent, or £1,800 per year. So, why not negotiate a discount of £3,600 off the purchase price, which accounts for 2 years of that missing rent? If you care so much about the cash flow, you could simply put that £3,600 into a separate account and pay yourself £150 a month difference. Investors often don't break down their investments this simply. You don't just make money from cash flow, you make money from capital growth too. If you buy the property at the right price, you can create a capital gain from the day you purchased it. Properties with lower rents are often avoided by new investors, but they can be fantastic opportunities for those who know how to take advantage. As an example, I recently bought a property which the company struggled to sell due to low rent. The rent was only £300 a month, but the market rent value was £700 per month, leaving £400 of missing rent. However, I saved £20,000 off the purchase price. The tenant stayed in for a year before moving on to another property, and after that, we re-let it for full market rent. Essentially, I made £15,000 on that transaction by purchasing a property with low rent and handling it carefully. So, there we have it. Rent is not a fixed feature. It's something you have to work on with the tenant, and that's the game. That's where the opportunity presents itself in tenanted, residential or commercial property transactions. Opportunities lie where people don't want to go. And when it comes to this, we need to remember that it's not all about cash flow. Capital growth considerations are a huge part of property investing. With properties that have lower rents, you can often negotiate lower purchase prices and gain a healthy profit from those types of transactions. If you're interested in finding out why landlords sell their tenanted properties, you can click on the link above where I've produced a full video on the subject. Please leave a comment below because I'll get back to every single one of them.